Joining us now is Jeffrey Lacker. He is the former Richmond Fed President, currently a senior affiliated scholar with George Mason University's Mercatus Center. Good to have you, Mr. Lacker. First of all, you heard Janet Yellen there, I assume. Do you agree with her characterization of where the Fed is in terms of being in a very tight spot?
Agree, and it's going to be tight for the rest of the year, I think. I think the inflation risks are serious, and I think the overhang of the episode we went through from 2021 through 2022, in which their missteps and delays allowed inflation to surge, is going to weigh heavily on them. They got inflation back down. Inflation expectations at a longer time horizon remained stable while they did so, which allowed them to get inflation back down. But I think having the public having seen that just recently is going to be wary. And I think you've seen evidence in the Michigan survey, for example, and the New York Fed survey that came out this morning that inflation expectations aren't quite as anchored as they were. And I think that's going to weigh heavily on the Fed. I think they're going to be very concerned about preserving their credibility through this next surge in inflation. And they're going to be very hesitant to cut rates into that.
For how long do you wait? I mean, obviously, we're sitting here every day talking about we really don't know where the tariffs are going to end up on so many countries and in different industries. Not to mention, we don't know the impact of this uncertainty and what it's creating in terms of the lack of decision making or perhaps capital allocation from a lot of businesses around the country. So how long do you wait if you're the Fed to sort of see what the end game looks like?
I think they're going to wait into the second half of the year for sure. I don't see anything coming before later this year. One way or another, I think they're going to have to, it's going to take a few months of data. They always say, don't make policy based on 1 month's data. I think it's going to take a while. And I think the uncertainty overhang is going to be serious. Remember that 2008, 2009 recession was a combination of two things. One is sectoral reallocation, resources, labor and capital moving out of residential construction related industries and into whatever was next. And a huge overhang after Lehman Brothers and the testimony of Bernanke and Paulson, a huge sense that no one quite knew what was going on in Washington, and it wasn't clear Washington knew what was going on either. I think that's you got both of those now. The order's different. You've got the uncertainty about what the rules of the game are, and whatever the rules are, if they involve substantial tariffs, they're going to involve a lot of sectoral reallocation. It's sort of the purpose of them. So you got both of those things going on now. So the potential for an economic downdraft is very serious now.
What is your sense in terms of business investment right now and just the overall climate? Do you expect that we're going to have a significant slowdown?
I think it's pretty likely. Not for sure. We could cruise through this if tariffs end up on the lower end of the range of possibilities, and there's a very large range of possibilities. We could have investment hold off, but muddling through without a downturn. It looks like growth is going to be under 1%, maybe close to zero on real GDP this year. So we could get by without falling off a cliff into a recession. But I think it's more likely than not that towards the end of the year, an actual downturn will come into play.
And then the Fed actually will be moved to act. I mean, we do get some rate cuts next year, perhaps?
Yeah, but it's going to be difficult. So it's not obvious with a supply shock whether the optimal policy is to ease or to hang tough and fight inflation. It depends on a range of circumstances, essentially whether demand falls more than supply. And if the supply disruptions are serious enough, you want to get on top of inflation before you